There is something that we need to understand as traders. I know the first webinar that we took, it was on psychology. To be honest, I think I poured out all my heart towards that particular video, my experience, because my first trading was in 2010, and I did actually took some money, but I lost everything. And it was so devastating, and psychologically I was messed up, and I had to stop trading. I showed someone recently of my transaction with one of the brokers in 2010, because when I mentioned to that individual that I've been trading for 2010, the person did not believe me. So he said, how can you be trading 2010? You should be billionaire by now. I said, listen, trading is a journey. Trading is not something that, it's not a get rich quick kind of scheme, as much as a lot of people want it to look like that. It is not, but it is a process. But the only difference between now and then is that I've been able to acquire some experience whereby, because back then I did not even have a mentor. I did not have anyone to talk to me about psychology, because psychology is like about, let me say, 70-80% of what we do, and analysis probably about 15%, and taking trade is probably about 5%. That is how I see, because once you push that button, you've already passed through all these other previous the stages I mentioned. So it's very important for somebody to be able to understand the psychology behind trading. But that is not the purpose of this particular webinar. The purpose of this webinar is to be able to understand what market structure is. If you do not understand what a market structure is, and then you are taking a trade, that means you are 100% a gambler, if I can just use that word. You are just trying, let me see if this is going to work out. But it's very important to understand the market structure. Is the market going up, or is the market coming down? You remember I was saying that it's important for somebody to have a trading journal and to have a trading plan. I'm a lover of movies, and one of my favorite films is Pirates of the Caribbean, and my favorite character is Jack Sparrow, and my favorite item is the compass that Jack Sparrow was holding all along, even though that compass looks like it was rubbish, because if you look at the first movie that was done, the first film for Pirates of the Caribbean, you will notice that the first person that saw that compass said it was not working. But as a matter of fact, to Jack Sparrow, that was actually working, but they cannot see it that way. So bringing that back to trading, when you have your trading plan and you have your trading journal, to any other person that will look like you are just trying to make up things, like you are trading Forex. No, these are your compass. So the trading journal and your trading plan serves as compass. So without compass, you don't know where you are going to. Are you going to the north, or are you going to the south? Now, the trading plan will tell you that, okay, if I'm going to enter a trade, I'm not going to risk more than 30 pips. If that is going to change, there must be certain terms and conditions that must be met. Then I can increase it to 30 or 50 pips, just in case I'm going to, I'm trying to swing this particular trade. So the question is, what kind of trader are you? I asked this question during the first webinar. I said, you need to discover the type of trader that you want to be. You can be a swing trader, you can be a day trader, you can be scalping, and you can be doing the trade. So if you are going to swing a trade, you need a journal that will actually, or a trading plan for a swing trading. The trading plan for a swing trader is different from a day trader, and that of a day trader is different from a swing trader. a scalper. So if you are going to fit into any of this, if you are not sure for now the type of trader that you are, then it is best for you to be able to find out even before you commit your money into the market. Go through a demo process, register with a broker, then try and start testing out different strategies and see which one actually fits your lifestyle, because it's all about lifestyle. Somebody like myself, I am a very, very busy person, but it does not stop me from trading. Like I said, if you look behind me, it's different from where I shot the last video because I am not around. So if I'm around, I can say, all right, I'm trading because I'm at home. I'm trading every day. I'm going to be a day trader. If I'm somebody that travels every time, say I'm so busy, I don't even have time, I will start looking for a swing, a swing trade. I'm not going to say, okay, I can actually be a day trader. It depends on how I'm able to manage my time. It's all about time management. So bringing back to the compass example that I was talking about, you need something to guide you. So it's not just about the trading journal and your trading plan. You also need to be able to understand the market structure. Now, that being said, let me quickly go to trading view. All right, so we have this trading view in front of us. Now, you can see the time frame. Currently, I'm viewing a particular time frame. You can see what time frame it is.
Yes, 5 minutes time frame.
Okay, so now if you are going to take a trade, this is more like, I don't want to go into the technical details too much. I just want to try and explain this in a simple way, so that when you are taking a trade, you know that I am doing something very, very wrong. This is it. So we go to 4 hours time frame, for example. When you look at GBPUSD, what do you think about the structure? Can we say that this is downtrend or uptrend?
It's an uptrend.
It's an uptrend. Right now, it's an uptrend. Now, a few weeks ago, we are all saying, including myself, that GBPUSD is going on a downtrend. But when you look at this structure, even when you draw your trend line from this place, connect the second one. Remember, do not force a trend line, and you connect it this way. Okay. Now, it's very clear that this downtrend from this place with this trend line is stopped at this point. It's stopped here. Unless it breaks this rectangle, then we can consider that, okay, this is going back to the previous trend. But as it is now, I will say that GBPUSD is back on uptrend. That being said, if you take that off, we look for another trend line from the downside this way. This is uptrend. This is actually a chart pattern on its own. This is uptrend. But we are not just looking at this 8 hours time frame. Let's look at the 4 hours time frame quickly. Let me clear this off. In terms of 4 hours time frame, it looks like for some time we had a bit of consolidation around this side, and then we have a fake breakout, came back, tested this, try again, tested this, and then went up again, and it could not come down, and then it broke out. Breaking out here is not linking up to this supply zone area. Market always reacts when it gets to the most important point. It will definitely react. This is the point that you make a decision, that am I going up or am I going to come down? With trading, you need to be very patient. If you're not a patient person, you're just going to be jumping up and down, you'll be losing money. You need to learn the act of waiting. It is in the act of waiting. That is where the money is. So with this structure that I'm looking at right now, I sent out a signal, I think about 2 weeks ago, and I said, if it broke a certain point, if we get to this point, we should sell. But if you are very good with your market structure, you should understand that this signal, it also means that if my stop loss is taken out, we should expect a change in market behavior. And that was exactly that happened. It broke out of that stop loss, and then it went as far as testing the 4-hour time frame order block, or what you can also call the supply zone. And that is where we currently are. So when you're now looking at the trade, this is 4 hours. We know it's an uptrend. The only thing that can invalidate this, if we have this to, dropping down here and breaking this previous zone. If it breaks this zone here, if it breaks this, maybe probably have a retest, then the next place that is going to break is this. They'll be looking at this point right here. Am I making sense?
Yes, sir. Yes, sir.
So this is what market structure is all about. I do not want to be using terminology about change of structure, BOS, and all these confusing terminologies. There is no point for that. The purpose of this webinar is for you to be able to understand that when market is buying, you buy. When market is selling, you sell. If I enter a trade, for example, if I come here, let me remove all this drawing. Let's remove all this drawing. Now, if I pick up a trade somewhere here, because I have a 4-hour bullish, this place here, engulfing, bearish engulfing. So if I'm entering my trade, and I decided to enter trade somewhere here, because I can see that this place here is a very good point to enter because of this. If you look towards the left, you have a very strong zone, and I'm selling from here. Why am I going to sell? Because realistically, I can see that we have this massive candle on the downside. So if you're a trader, this easiest thing in the market is when you have a bearish candle and then you decided to buy, you are doomed to fail. If you have a bullish candle and you decided to sell, you are doomed to fail. It's as simple as that. That is the simplest. That is the secret of the market. That is the simplest. If you now look at it, forget about what I've just said. Assuming you want to enter a trade right now. You want to enter this trade. This one here. Let me go back to 2 hours. Like I said, this is going to be very brief. 2 hours time frame. Look at this point here. Look at this candle. The market always going to leave some kind of, what do you call it? Like a clue that this is what I'm going to do next. I'm going up. This is a clue here. You are having these candles. You have all these candles. This is the structure. So the structure here is been doing is, going up and down. Where is that? I don't have my mouse with me. It's been doing that. Pull back. Then so it goes this way, come back, go this way, come back, go this way, try to break it. Can you see that?
Yes, sir.
It was equal, and then try again, and probably there was a news, because this looks like 12 o'clock, whatever time it was, and we now have it, we have this first breakout, and we have this long wick. So the wick here is just like a first breakout. Then what happened after that? The market just shot up, and that's it, it's gone. But that doesn't even matter. What matters now is understanding this structure. So understanding this structure, that when the market is going this way, is going up, down, up, then comes down, and it has not broken the previous low. We are still expecting it that it's still bullish. So we continue in that trend until the previous low is broken. So you have that change. If you don't have that change, you still have that bias. But this is where the problem is. So when you understand the market structure, that, okay, the market always gets to a certain point and there was going to be always reaction. So reaction can be either in the supply zone or in the demand zone. It can be where you have your resistance or you have your support. It can be where you have, if you are maybe SMC trader or ICT trader, it does not matter. What matters is, do not be selling when you have a bullish engulfing candle. That being said, when it comes to entering a trade, it is a different structure on its own. From everything we are seeing here, always go back to your smaller time frame before you even take a trade. Go to the smaller time frame. Say I'm going to 15 minutes time frame, for example. This is my 15 minutes time frame. So the market has been going up. As soon as we have our engulfing candle, maybe I jump in, I start buying. If I see any slight difference, say there is a bearish candle, then I can come off the market. In this situation, I look at this market right here, just about 2 hours ago, on the 30 minutes time frame, because I know it has been bullish. I look at it and I can also see that at this point here, we have some kind of reaction. What did I do? I waited for an engulfing. This is part of the structure I'm talking about. The structure now is the market gets to that point, it's going to react. I waited for an engulfing. And as soon as I got that engulfing, I entered this trade and I put my stop loss right here. It's as simple as that. It's as simple as that. Put my stop loss right here. Now for scalpers, that is fine. And my stop loss, I just put it right here. That is ratio 2.16. I'm happy with that. If it's a profit account, you have your 2% banked. So far now, you already have 1% banked. So if you have any question, please ask me, because we still need to have this class again, whereby we can talk about top-down analysis from the monthly time frame to 4 hours, then to 1 hour. Then we can now talk about to 5 minutes, even 2 minutes or 1 minute time frame. So you can see how the structure changes. This is the thing I want you guys to remember. So when we are trading, it's important for us to understand that if you are buying, the moment you start buying and the market starts showing you signs that I'm going to reverse, fellow traders, take note of this. Do not force yourself to keep buying. Your money is not enough to buy up the market of trade, $6-7 trillion market. Your money is not enough for that. If the market is saying, guy, you are buying me now, but I am reversing, you need to understand that once it gets to that point, come off the market. This is how people blow account. And I cannot tell you how many people have actually personally sponsored that told me they can trade. And I said, okay, try this profit account. And they will come back, they say they blew the account. Not even 10, not even 15 people. They will say, I blew the account. And now in my mind, I'll say, you cannot blow the account unless you do not follow your risk management. You do not fully understand market structure. And the danger is when you feel like you know all these things and you are trading and you feel like, oh, the market will come back to my point. Who told you the market will come back to your point? Understand the structure. If it goes against you, come off the market. Retain your psychology. The problem with people now is that they just believe that since this market is on the uptrend, sometimes the market will reverse. It can be because as a result of news. It could be because the bank just feel like we have a good market here. Let's counter these guys. Let's buy it off, or let's buy this. This is a good price for us. Let's buy it up. and you're trying to compete with big banks like HSBC, like Barclays, like NatWest, like GTB and Zenith Bank and all these banks. You cannot compete with them. The banks, if they are buying, we buy. If they are selling, we sell. And that is how we make money. There is no secret. Trading is not a secret cause. The only thing about trading is that follow the trend. So if you know that right now, yesterday, GBPUSD was going up, a lot of people lost their accounts. A lot of people blew their accounts yesterday because they feel like, yeah, I'm sure it's still coming down because it's been coming down all this while. Guess what? The bankers yesterday, they were in charge. They want to make sure that they cleared all the stop losses and they took all that money, and that was the exact thing that happened. When you see a spike like that, that is against your own, your own plan, your own bias, be very flexible. Flexibility is it's not a sign of weakness. Rather, it is a sign of professionalism. It is a sign that, yes, I am a professional trader. And when I see a market is going against me, I am bold enough and I will come up the market. So the market structure can be downtrend as at the time you place the trade. While the trade is going on, the trend can change. So be very flexible with the change and follow the trend. Come up the market, wait. Now I'm going to chip this in very quickly, and it's a little bit of structure of psychology. And let me tell you this, guys. If you are losing money in Forex, if you take the first trade, you lost. You take the second trade, the same day you lost. Do not trade in the next few days. If possible, forget that week. Come back next week. But between then and that next week or the next time you trade, what are you going to be doing? You need to revisit your trade. You need to check your trade again and make sure that, what did I do wrong? I said this in my first webinar. The greatest sin you can commit as a trader is deceiving yourself. A lot of people are deceiving themselves. Don't deceive yourself. You know yourself that this is me. And you know what, when you made a mistake. So once you make a mistake, just accept your mistake, answer up. It's like when the police want to arrest somebody, say, oh, guilty or not guilty. Mr. Police, I am very guilty. You see, I'm not supposed to be drinking and be driving, but I've been doing that. I'm very guilty. Raise up your hand and surrender yourself. That is it with the market. Once you have made a mistake, don't even revenge trade. Yes, your analysis may be right. Yes, you know the market structure. Yes, you know the W pattern. You know the N pattern. You know the bullish and you know the bearish, all those candles. You know all those things. You know the flag pattern. You know all those things. I will send a PDF for everybody to go through. You know all those things. But at the end of the day, be flexible. Market bias over the window. It is now you that will now be able to control what you trade. This is the take home. I would like everybody I want everybody to understand that, yes, you know the market bias. When you look at the GBPJPY, for example, where is that, the beast? I call it the beast. GBPJPY, the beast. Yeah, I love GBPJPY. Would you even believe that I haven't traded GBPJPY for like a week or 2 weeks now? Do you know why? I'll show you quickly. Because I'm not just going to be sending you a signal when I feel like market is not ready. Where is that? Oh yes, this is GBPJPY, baby. I love this pair because it's very volatile. This pair I have a plan for this. I'm waiting for a point. Once it gets to that point, this pair is buying me something very, very important in my life, and I already have a plan for that. So I'm not in a rush. This is the thing. Don't be in a rush to take a trade. Look at this, for example. Let's go to what time frame can we go to? Let me go to 8 hours. It gives you the overview of what is happening in the market. Can you see that, guys?
Yes, sir.
Can you see what is going on here? This market is always coming back here. It's coming back to this bad guy here. This place, there is something about this zone. It's very strong. So I'm waiting, but this is not the only thing. GBPJPY gave us a clue, and the clue is it already touches this place. I'm just actually waiting for this bad boy here to bring itself down here. Come here and go here. How many pips is that? 600 pips, over 600 pips. And don't forget, we'll talk about market structure. The structure of this pair is what? Then we need to go back to, let's go back to monthly time frame quickly. Monthly time frame. This is monthly time frame. Look at this. This pair has been going on a very bullish trend. And what happened? It broke the previous high as high as 2015. Can you see that, guys?
Yes, sir.
Can you see that? So what I'm waiting for is something to happen and a massive drop. If there is no massive drop, we keep riding it up. But at this point, I'm still expecting a reaction. So for me, as far as I'm concerned, you can scalp it. You can scalp your GBP, JPY, do your 20, 30, 40, 60, 100 pips. That's fine. But I'm looking forward to the massive 1,000 pips. And this is going to happen because this is Forex. It happens every time. So we have that. I'm waiting for this. So this is the market right now. Even when you look at, let me take this off. Look at this one. Because it's, I'm using monthly now. So we have that. It will still come here. You're hearing from here first. It's going to come here eventually because the Japanese government are doing everything they can. This was 2008. It's still coming here. So anytime you are selling GBPJPY, remember this guy, this bad guy is on the uptrend. Guys, we have trend line to confirm that. It's on a uptrend. It's been going up and up and up since when? Is that 2020? Yeah, it's been going up since 2020. It's been going up. Having taken out the previous low right here. Yeah, it took it out, you know, and then it's been going up. But currently, it's in a very, very important area. So if we have a break up, I'm expecting a retrace anyway. I am expecting a kind of a, you know, to come back here probably, and then shoot to the moon. That's it. I'm just waiting for that pullback. Pull it back for me, please. Then I enter, That's it, we're gone. So you need to understand market structure. So when you're taking your trade, it's good to use your 15 minutes time frame, but market is not 15 minutes. It's not just 15 minutes. You have 1 hour, you have 2 hours, you have 4 hours, you have 8 hours. You need to be able to understand what is the market saying to you. Even when you go to the other ones, if you go to, what is it, the GBPJPY, USD, for example, that also have its own story. This is the story. It's saying it's been going on a downtrend. Guys, can you see what we are saying here?
Yes, sir.
This is a strong, very strong trend line. This is a very strong trend line. This is a very strong, I'm not cheating this trend line. This is not me. This is a very strong trend line. So now probably it's going to come up here and then we're going to have a drop again. But it's always important to understand that GU has been on a downtrend since a very, very long time. If it breaks this, we should expect a retest, which is what normally happens, and then it can now go up. Some people are still expecting GU to go as far as, I don't know where they want it to go. Maybe they want to be 1-to-1. It's not going to happen. So GU is a very strong currency, and we should always expect a fight. It will not go down without a fight. That is the truth. That is the reality. So currently, if I were anyone, I will look at GU. I will look at the structure right now under 4 hours time frame. The 4 hours time frame, which we previously checked. So we have that. We are currently at a very important structure. This zone right here, if it breaks this zone, we know what is going to happen next. It means that sellers, they don't have power, the buyers are in the market. But you do not need someone, any magician to tell you that you have more buying candles from here. If you look at this point here, from here, you have more buying candles. Even this way, you have more buying candles. This trend line, you have more buying candles. It's like that. That's what it is. You have more buying candles. Even if you do another trend line like that, yeah, you have more buying candle. So yeah, that's how it is. Anyhow you want to draw your, your trend line, does not matter. You have more buying candle. It's still going up. Keep drawing it. It's not coming down. It's going up. It break, retest, break, retest, then broke again, trying to retest again. Not come back to this trend line. Then it's going up again. This is GU for now. So if we have a news whereby GU dropped, guys, buy. If it drops, look for bullish, engulfing, enter your trade and buy. These are the structures, simple structure that I follow, and it works for me. It works for my $25,000 profit account, for the $100,000 profit account. It works for my profit account. It works for my, even my personal account. But remember, if market is going against that structure, just come up, take the little money that you have, and then run away from the market. That is all I'm going to say about, today. If you have any question, please just ask me. Then we can round up. And if you want to continue holding your trade, you want to do whatever you want to do, then you can continue to do that. Any question, please?
Sir, please, like, I don't know if there is a way you can show us how to identify fake breakout on a structure.
The breakout?
Fake breakout.
Oh, the fake breakout?
Yes.
Generally, when we have a fake breakout, what you need to watch out for are the candles that follows after that. Because when something, broke out like a fake one, like you said, it will just happen like that, and it happened within a short time. That is why if you have a breakout into a new zone, you need to wait and wait for your candle pattern to form. That is why it's important for you to be able to tighten your stop loss. The problem is this: people will just enter a trade. They will now have a fake breakout. They will now say, this trade is still, since it's down now, so it's going down. Who told you it's going down? There is no mentor in the world that will tell you that any strategy is 100%. But you're always going to see the signs that this thing is changing. The fake breakout, for example, the one I showed you on TradingView, once you draw those important zones, you always need to drop your important zone. Fake breakout will always leave things like long wick, which is a sign of rejection. So when you have that, you should be able to know that, okay, I have a long wick here. If it's to the downside, it means the seller are losing. If it's to the upside, it means the buyers, they are tired, they are giving up. So these are the things that you need to look out for. Please do not put yourself too much under pressure when it comes to trading, because this thing takes time. It took me a long time for me to understand these things. Even when I'm watching videos of mentors, I'm watching a lot of things, and I'm like, okay, why are you selling this market? Because this structure I'm seeing here, this guy is showing us on 1 hour time frame, you have more engulfing, bullish engulfing candles. Then you still want to sell. Why do you want to sell? Why can't you just wait for a little bit of the market to drop down, then you buy? Why do you have to do the other way around? All these things are psychology, and they are also, it's not like it's very difficult. It's because sometimes people just want to take a trade. Resist the urge of taking trade every day. Do not take a trade unless your confluences are met. And when your confluences are met and your stop loss is taken, accept it, put it in your journal, write it down, and say, today I took a trade, my stop loss was taken, but the market now went in my favor. The reason for this, because I was not patient enough to go to take the trade at the point of interest, or I was not patient enough to wait till after the news during the New York session. So you know yourself better than I do, than anyone else. So you can deceive everybody, you can't deceive yourself. At the end of the day, what is important is follow your plan. Follow your plan. I left a message in the group. Guys, send me your trading plan. Guys, you know that only 2 people sent that. Out of everybody that have been sending me, they've been taking trades. So it means that maybe out of about 60 people, 2 people, that is less than even 1%. And you're telling me you are taking a trade. If you are taking a trade, you don't have a plan. Dear brothers or sisters, whatever you want to call yourself, you are gambling. You are not taking this trading very seriously. Trading is not something that you are just coming like you are walking in the park. You take it very serious. It's an investment. You treat it like a business. I take my trading as a business. I have my journal here. Everything I'm doing, everything, I put it here. It's all here. It's all here. Even there was a time I actually put my plan, my watch list. If you can see, I have my watch list here. I have my risk calculator, what I'm risking. Risk only 0.5%, 30 pips. How much is that? GBPY 15 pips or 10K account, risking 15 pips, getting with 0.61 loss, $50. I put everything right here. I'm not just saying all this for the sake of saying it. I'm practicing it. So if you do not follow all these steps that I'm saying, that I've been preaching for weeks now, then you are wasting your time. Honestly, because we have to tell ourselves the truth. This is how it works in Forex. Forex, you have to be determined. You have to follow it through. It's not something you just take a trade because people are buying, you are buying. Understand the structure. What is the structure right now? The structure right now is that we are in the consolidation stage. If you are in the consolidation stage, you know that this consolidation trade, have a plan for consolidation trade. If you are on uptrend, have a plan for your uptrend. If it's a downtrend, have a plan for a downtrend trade. If you cannot decide, is it up or is it down? Is it consolidation? Because sometimes the market is not even ready. There was a week I did not even trade. I would look at the market, I checked it, I looked at everything, and there was nothing in the market to trade. But I was seeing people sending signals to each other, like different platforms saying buy, sell, buy, sell. But I looked at it, I said, market is not ready. Do you know that when the market was ready, it went like 50, 100, 200, 300 pips, cleared all those stop losses. Good morning for the bankers. They finished all the stop losses and they move. This smart money, this is how it works. They take everybody's stop losses and then that's how they enjoy themselves. It's how it is. So the important thing is understand the structure. If you have a problem with a structure, if you don't understand the structure again, if you want me to take any other video that you make, maybe for you to understand what I'm talking about, then drop me a message. We'll come back again. Then we'll do a video on that. I don't know if I'm making any sense. So we know what is going on with GU. We know that GU is still trying to touch that supply zone again because it's a very strong zone. If it breaks out of that zone, of course, we should expect that the buyers, they are really, really up for business and they want to keep going up. The same thing goes with GJ. My GJ buyer still remains bullish because the 4-hour time frame says so, and we are having weak to the downside, so we are still going up. But always remember that the key zones, you always expect reactions. Don't try to go against the trend at the key zones. Avoid the urge for that. Avoid the urge for that. Someone sent me a message that I do not talk about gold. Yes, I do love gold. My first experience with gold, I made a lot of money and I lost quite a lot of money before I actually understand the market structure and what is going on in the market. Just very quickly, we quickly touch on gold, then we can wrap up. All right, guys, so this is gold. This is gold. Look at gold. Gold is doing really well. It's doing fine, beautifully well. You know, look at it. It's still trying to break back into this zone. This zone here is trying to break this zone and it still haven't been able to do that. And as you can see that the market is still going on the uptrend. Of course, we do have sometimes, you know, it will be bearish, but when it's bearish, it's not bearish for a very long time. So it means that when it's bearish, start looking for time to buy. It's as simple as that. But be expecting a reaction when gold touches $2,400, somewhere here. Expected, you know, a serious reaction. It's still trying to go back to the previous high. And when you look at it as far back as April 19th, 19th of April 2024, and there was another spike. I'm sure that was down to the news on the 12th of April 2024. So for now, you know, gold is refusing to come off. It doesn't want to leave. It likes where it is currently. So I'm expecting gold to kind of still come back to this zone. If it gets here, probably will be touching back to come and try this place. And then if it gets to this point again, I will be setting my set and forget, whereby I'll be buying, but I'll put my stop loss somewhere around just a few pips down around here. Then I'll be buying again to the where is it? Yeah, we'll be buying again, back again. Consolidation on a 4-hour time frame. That's what is going on here, guys. That's what is going on here. This is my bias for gold. Of course, if you want to do a lower time frame, it's different. If you want to swing it, this is how I swing down my gold. I'll wait, come here, set my, you know, my forget, whatever you want to call it, and then let it ride all the way back. As far as we have wars going on in Ukraine, in Israel, different parts of the world, gold remains bullish because people cannot access bank, they cannot access money, and gold remains a vital commodity to be able to exchange with. So this is what is happening, and yeah, that is my bias in gold. And of course, when you look at it again, let's look at it on a smaller time frame, 15 minutes time frame. All right, 15 minutes time frame, you can see, yeah, gold is coming down, trying to come down, but don't forget, we've been having our bullish, it's been bullish for some time. Look at that, guys. Can you see that? Trend line. Yes, sir. Trend line, it works like magic. Victor, you mentioned a fake breakout. This may be because of news. Look at it. Can you see it here?
Yes, sir.
Tiny breakout. That's when you do your stop loss. Don't be too tight with your stop loss. Be generous. Give it some pips down. If you put it a little bit down, it will take you back up, back to bullish again. And after that, the market came and we went up, came back to test this trend line. Probably will come back down here again, come down here. Then I will expect a shoot up to this place. So yeah, that's it for gold. If you are taking a trade like this, remember to always put your stop loss. Put your stop loss somewhere. Anyway, so just kind of put your stop loss somewhere on position. I just say I'll put my stop loss back here or here. It depends what you want to trade. Stop loss somewhere here, and then you trade your gold. You know, it's as simple as that. You know, trading is not a rocket science, but it takes time to master the craft, and that's what it is. So that's all I'm going to say for tonight. If for the first time, you're welcome to my Forex, and I hope you enjoyed yourself tonight or wherever you are. Just have a fantastic evening, everyone, if there are no other questions.